Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great day today. And for those of you that follow me on the YouTube community tab, you guys should know that I was planning on making a swing trade video today, but I am not. And the reason why is because my dog is incredibly sick, so I hope you guys understand that I just wanted to make a shorter, quicker, easier video so I could spend more time with my family and more time with him because he's not doing too well. So what I want to do today is talk about banking. Is your money safe? Is it worth it to buy banking stocks right now? Some stocks to look at. So I hope you guys all enjoy it. Short, quick, fun, exciting video today. So let's dive into it. All right, so what's going on with the banking sector? I think we all know that we've seen several banks actually close their doors. We've seen banks like First Republic, Silicon Valley, Signature either had to get the FDIC involved or actually have to get bought out by other companies or liquidate some of their assets. So what we've seen in general is so much emotion in the banking sector, in the banking marketplace. People are scared. Is your money safe in a bank anymore? Well, in the short term, it is. Most of us have under 250 grand, and that's what the FDIC insurance amount goes to. So if you have over 250 grand, I guess you have a couple options. One, you can either just hold off, and if something does happen to the bank you have, they do try to pay you back your money, but they're not entitled to. Two, just get another bank and put more money in it. I think one of the things that a lot of very, very wealthy people do is they have several banks and they just go up to the FDIC insured amount and then they go somewhere else. A lot of people do that. A lot of millionaires and very, very wealthy people do that. And just so their money is always protected. But what's going on? So really what we've seen is all these banks close their doors. They close their doors. And the reason why is just because of everything going on in the economy. Right now we've seen high interest rates. Anytime we have high interest rates, banks don't make as much money off loans. Number two, during times when interest rates were so low, a lot of banks actually bought bonds as an investment. The issue is when you buy bonds when interest rates are so low and the interest rates go up, those bonds become they're worth less. Now multiply that out into billions of dollars and you've seen a bank that lost billions of dollars. So what causes this to happen is people, if let's just say you realize your bank just lost $4 billion, maybe you'd say, maybe I should pull some cash out, right? So you pull some cash out, and then your cousin said, why'd you pull cash out? Oh, this bank just lost $4 billion, so he wants his cash out. So it just kind of starts this domino effect, and it gets very, very scary because the banks only have so much money at their bank, really, because they loan out money to real estate, to credit cards, to loans, to mortgages. And so it makes it very, very hard for the bank to actually give you your money just because most of the time they don't have it. But now that we kind of understand what's going on, what happened with Silicon Valley, the more popular one? Well, pretty much what happened with them is over 90% of their customers were actually above the FDIC $250,000 limit. And these were, venture capitalists, hedge fund managers, all these very, very wealthy and influential people. So what happens is when you see, the bank you have, lose money, you pull cash out and it starts this domino effect. That's pretty much what happened, and the company did not have as much cash as it claimed to have. So recipe for disaster. Okay, so what also happened is we've seen the whole banking sector in general sell off like crazy. We've seen companies like I believe it's PacWest fall like 80%, and then today it's up another 80%. So banking's very, very volatile. What it means is when you have higher volatility, so it goes up and down at rapid rates, it just is a higher risk tolerance. So higher risk often leads to higher reward. And that's kind of my strategy and my mindset with banking in general right now. Yes, you can make a ton of money off banking stocks just because some of these stocks went from $80 to $3. So if they go back up to $80 again, you're like doubling your money like 8 times or even more. So you make a killing. But on the flip side, that $3 stock could get bought out by another company, or it just could become 10 cents. The volatility is so high right now. And this reminds me of 2008, where we saw the Lehman Brothers close, and just a variety of other very, very large banks close their doors or just get annihilated and bought out by other banks and bigger companies. I think that's what we're going to see. I think we're going to see a lot of banks get bought out. I think we're going to see a lot of banks sell off a lot. And I think the volatility is going to continue until some of these rates go down a little bit, and these banks start turning over more profit, more revenue, and all that stuff. So that's what I think is going to happen. And should you buy banking stocks? Well, that's all up to you guys. Honestly, like my strategy, kind of like I mentioned, is you can make a lot of money from it, but it's also very, very risky. It's a risky investment. I almost would rather see you guys invest into like banking ETFs or the S&P 500 ETF or like a high dividend ETF. I just think the options of buying right now are suited for banking, but the risk is so high that I would just rather see you guys invest in something a little more conservative that still carries a ton of potential. For me, that's where I'm mostly investing. I'm not really investing too much into banking. I would rather sit on the sidelines and watch what happens, because you never want to invest in a sinking ship or a falling knife. That's a recipe for disaster. So that's kind of what I think is going on. Like I mentioned, short video today. Hope you guys enjoyed it. Get ready for another fantastic video tomorrow. It's going to be a swing trading video. It's going to be a full course on it. I want to do something very exciting for you guys, because I know a lot of you guys watch my content for swing trading and trading videos, trading styles. Those videos always do well. I just like to do other videos sometimes, so I hope you guys understand that. But we'll see you guys later. Unedited, raw. Hope you guys enjoyed it. We'll see you later. Take care, guys.